In this video lesson, I will show you how to use Pip Calculator for Volatility 10 1-second index. The Pip Calculator link will be below in the description, so you can simply click on it and open it on Get No Trading website. In this video lesson, I will show you a few examples of a buy and sell order, so you can see how to use this Pip Calculator in your favor. Below in the description, you will also find a link where you can download this synthetic indices Pip value table with all the details regarding all the synthetic indices that are available with the derived broker. I have put also a contract size, minimum and maximum volume size, and also what is the Pip value for each of these symbols. Inside this PDF you will have also other details like what is the formula, how to calculate the Pip value, and also how to use that formula and also the Pip calculator. Let's move forward. Let's move to the Pip calculator to show you how to use the Pip calculator and which variables are needed. On the top you have a Pip value which is in US dollars. When you click the calculate button you will get here the Pip value. Then you have a symbol. I have set here to Volatility 10 1-second index, and below that you have a drop down menu with all other synthetic indices. So you can pick one of them and automatically this Pip calculator will populate the contract size and also the point value for the derived broker. So it is easier for you, so you do not need to bother looking in the Pip value table. Below that you have entry and the stop loss and take profit fields where you can enter them to calculate the stop loss and take profit difference, and based on that you can calculate how much of the stop loss take profit would be in US dollars. Simply copy paste this value from here to the point value and click calculate to get the value. But you will see that in the examples. So the volume is set to 1, which is a 1 standard lot. You can change this value to any other number, but use dot instead comma because the volume is set with the dot. The contract size is 1. It is defined by the broker, so you need to check to that with your broker in specification sheet, and the point value represents a 1 pip. That means if the point value is defined with 2 decimal points, in this case it is, that means when you go here to the chart you can see that the price is defined with 2 decimal points. So when the price change, for example for 0.01, that means the price has changed by 1 pip. So if you have 3 decimal points here on the chart and the point value tells you 0.1, 2 decimal points, that means the third decimal point on the chart will not be mentioned as a pip, but it will be as a pipette. But let's go to the chart and also check the examples so you can understand how to use this Pip calculator. Okay, I will put some kind of a trend lines just to see where the market is heading so we can plan something. Okay, this is it. I will put this one like this. Now you can see that the price is heading down, so the market is in a downtrend, but it has gone outside and make a breakout to the upside. So I will open one buy order and one sell order. So for example, if you would like to open the trade at the current moment and you are expecting that the price could go down, which means you would sell an open order, sell order, and you would put stop loss here, just above all the highs. And the take profit would be somewhere here, where it is the bottom of this and where their wicks are. So you would like to calculate how much of money would be a stop loss and take profit. Before entering the trade, you can define that by entering the entry price here. So the entry price would be around this current market price. It will be 9208.40. Remember to copy the price what you see on the chart. And then the stop loss would be 9219.36, which is just above the open price, and the take profit would be 91825.17. When you click calculate, you get the price difference, and this price difference for the stop loss and take profit simply copy and paste here where the point value is, click calculate, and you get the value in US dollars. So the stop loss would be $10.96 and the take profit would be $23.23. So if we open an order with these values, let's see what happens. We'll open new order, volume is set to 1, which is a standard lot, and then we have a stop loss equal to, I will simply copy paste this one, and take profit would be this one, and click sell. Okay, let's go to the chart to remove these horizontal lines so we can see a stop loss and take profit level. So the stop loss would be equal, just use your mouse and hover over this line, minus $14.30. Okay, and the open price is 9205. We need to change that, 9205.06. Calculate. Let's copy this stop loss difference, put it here, and calculate in US dollars. It is 14.30. So it is 14.30. It is the same value that we have here on the chart. So you can simply use this Pip Calculator to calculate the stop loss and take profit before opening an order to see how much you would make or lose money. So if you know how much or how much money you would like to get and also how much you could lose, you can simply use the Pip Calculator and find the entry price and the stop loss take profit and put them here on the trade. So let's check. The take profit would be 19.89. It is the same value that we got here. So you can see how you can change the values here in the Pip Calculator to calculate the value for the profit and the stop loss. Let's close this order and open a new one, which will be a buy order, and that means the price, you are expecting that the price will go up, where the stop loss would be below. For example, let's put it below these wicks and put stop loss just above these highs, because you are expecting that the price will go up. So to calculate the stop loss and the take profit, how much money you could lose or make, simply enter here the values. I will leave the entry price for now. I will put new one, stop loss 9190.01, and the stop loss is below the open price. Take profit will be above 9227.11. Click calculate. This is the price difference, and this is the how much you would lose on this trade, 15.05. So if you change the volume to any other value, let's go to the table and see what is the minimum and the maximum volume for this symbol. So volatility 10 with one index, the minimum is 0.2 and the maximum is 100. So we can put these values here, 0.2, and click calculate. So with volume 0.2 on the stop loss, which is 15.05 price difference, you will get 3.01. Let's open a new order with the volume 0.2, which is the minimum. If you go below that, you can see it is not possible to open or buy or sell order because the broker doesn't allow you to that. You need to put the minimum what is defined. So we would put a stop loss here and take profit here, and we would open a buy order. Great. The entry price is 92. We need to change that, 9202.09. Click calculate. We have a stop loss difference, put it here, click calculate. So the stop loss would be $2.42. Let's remove these horizontal lines. Now we have stop loss here, minus 2.42. It is the same value that we got here. And the take profit would be, just a minute, 5. Let's calculate what this would be. Take a look. It is the same value. So we could calculate the stop loss and take profit before opening the order to define how much risk we would take with the stop loss and which target would be for our take profit. So this is the way how you can use volatility 10 1 second index, how to calculate before opening an order, to calculate the risk and to have a proper risk management. This way you can calculate any other value which you would like by changing the volume and also changing the price levels. So if you have any questions regarding volatility 10 1 second index Pip Calculator, please leave a comment, and if you have any other questions, please do ask. And if you like the video, click the like button and subscribe. See you next time and happy trading!